Wayne, I mentioned there that this morning when we put up the companies, we put up the 4 platinum miners because there's great interest in them. And for a change, you now start distinguishing between the shares. You may have a view on platinum, but now you look at which platinum company you're going. Interesting that Lonmin actually recovered some growth.
But it's fallen so much. I mean, Lonmin has been as
like 50% in a year.
Yeah, but as of all the platinum shares have been pounded, Lonmin just more so than the others. Look, it's interesting. Platinum shares now are 1/3 of their previous high, whereas the all-share index is at its previous high. So it shows you the extent of underperformance. And it's quite simple. In the last decade, the rand price of platinum in rand terms has gone up 8% a year compound. Costs have gone up 15% a year compound. So there's your problem. No one's making money. Now, surprisingly enough, I'm still quite positive on platinum longer term, because unless technology changes, the world needs platinum and there's a restricted supply. So if there's a restricted supply, supply can only come on stream at the right price. In other words, the price has to go up eventually when demand comes back. So either demand comes back or supply must be curtailed because people aren't making money. Whether you buy the platinum shares or not, I mean, I've been very negative the platinum shares for years now, simply because I thought they were massively overvalued. Now, the next question you've got to decide, or you've got to answer, is when do I go in and buy platinum? Because I actually think it is buying territory, just that when an industry is in stress, and it's not just in stress because it's not making money, it's in stress now because I don't know how Labour can now pick the time to start asking the platinum mines. I mean, it sounds ideal. Ask people for more money when they're not making money just seems fantastic logic to me, but let's leave that aside. Now they're facing labour problems, and we've got this whole, I mean, we know all the stories with platinum. So I think you steer clear of the shares for a while. I just don't think it's the right time. There's just far too much negative around. But on a five-year view, platinum shares are in fact cheap because platinum will recover again.
Again, it's the question, in the long term, will there be demand? And the consensus is yes.
And
we've got most of it.
And there's restricted supply. So that should be a good commodity.
And the market is already correcting. It was correcting before the Lonmin thing. Lonmin ceased production.
It's been correcting for a long time.
Aquarius also ceased production.
Lots of people. Amplatz, all the joint ventures, they're all closing. I'm actually surprised that Amplatz has not announced a big reduction. Maybe they can't simply because of potential labour issues. But we've had 300,000 ounces taken out of the market. We need another 500,000 ounces. Then the market will rectify. I mean, the platinum price is already up $60 since, not really since the unrest, just since the supply's been curtailed a little bit. So, I mean, that will ultimately save the mining industry.
Could we see some consolidation in that sector where you have a mine, a company that can't get going, but there's still assets and a bigger diversified company can take?
A lot of the companies are running short of money and need cash and are struggling, and especially a lot of the startups. I mean, they just, when they listed 4 or 5 years ago, life was just wonderful.
Isn't it also interesting, the royalties, the windfall taxes?
Oh, yes, you don't even worry about that anymore.
It's gone now.
It's gone now, because there are no more windfall taxes.
Yeah. Viv Govender made the point this morning that if and when the sector does recover and they start making big money again, he said there's going to be a cap on the profits to be taken on the investors' share, because there will again be that call for the windfall.
But that's normal. It happened in Australia. It happens, I don't think... I think when the government sees anyone making what they deem excess profits, they want a share of it, even if it's only just to gain some popularity with the general populace. But this is not unique to South Africa.
Yeah. Let's just have a word on Northam. They were a platinum company that did report today. They talk more about platinum group metals than platinum.
PGMs,
the PGMs, they had a 9.6 drop in headline earnings per share, 5 cents interim dividend, no final dividend. Are they a bit better off than the others?
I must say the results seem better than what I thought they were going to be, and the market pushed the share up, not much, but the market certainly pushed the share up a little bit. They were better than what I expected, and they're certainly better than other mining results that we've had just recently, but of course they need capex for.
Well, the market agreed with you because it was up 5%.
Oh, was it up 5%? I didn't quite.
I think in the end it was up 5%. Interesting, in their statement, their results statement, they talk about the labour agreement that they made in November 2011,
which is a 3-year
8 months ago, and they said in the statement 2-year wage agreement from November 2011. Therefore, the implication was, therefore, we're hoping not to be affected by the current demands but maybe that's naive.
Yeah, it probably is. But look, there has to be some realization by everyone involved, not just the unions, everyone involved, that the industry as a whole is in fact struggling.
Yeah. What about Woolworths? Good results, and they looked good too. 38% dividend, although part of that was the tax on companies and so on. But this looked very good.
No, it was very, very good results. The other retailers that we've seen a lot of them reporting now. I mean, there's no ways the results were bad, but I must admit, other than Woolworths, I didn't think the results lived up to the share price. So remember, this is not a commentary on whether the company is doing good or bad. It's just a commentary on what the share price was expecting. I think Woolworths is the only company, the results we've seen just now, where the results actually lived up to the share price.
Well, the performance today was indeed 5.17%, so
very,
good results,
very strong performance.
And people have got into
the share. But I mean, they were good. There were good results out of the other companies, but still, I think, disappointing in relation to the share price. Their shares also went up. So, I mean, it looks as though this hype and froth around retail shares hasn't come to an end yet.
So, would you still get into them?
No. At the end of the day, you've got to hang your hat on valuations. Now, I don't know whether it's a precursor or a taste of anything that could happen in the future, but when the whole violence started, the retailers got pounded.
Well, there was a 5% drop in the retail index the next day.
Pounded. And that's simply because when foreigners decide enough is enough, they got no tact there. They just sell. They don't care. And I mean, I'm not sure what the number is, but it is, if you exclude the dual listed shares, it is by far the biggest percentage of foreign ownerships in our retail shares, significantly more than local players. So when the tide turns eventually, which of course it will, you must be very wary. But at the moment, I just cannot, to be honest, I can't see the tide turning. But I wouldn't buy. You've got to hang your hat on valuations. At the end of the day, it's all you've got as an investor.
Well, that was Wayne McCurrie. Thanks to Wayne from Momentum Asset Management.